market view. We'll be analyzing the charts of the Indian markets, the US market, and have a review of what happened in the global markets last week. Further, we'll also study the charts of gold, oil, and Indian rupee and have a brief discussion about the sectoral action of the Indian markets. Friends, we had a major event in the last week. The ICC World Cricket Champion kicked off in India. We will study a few stocks which will directly benefit from this major event. Friends, if you're new to my channel, please subscribe and hit the like button. Also, if you have any comments, please do leave in your comment section. So let's start the analysis for this week. Nifty daily chart. Friends, we did discuss that the Nifty will take a range of support between 19,300 and then it would move on to 19,700. You see that Nifty did behave as we had discussed last week. You can see this was the candle which was created on Tuesday. Then it opened on a gap down opening. It took a strong support over 19,300 levels and then it started to experience a short covering. You can see these are the short covering candles which was created in the Nifty, and then it did try to breach 19,700, which was a strong resistance, but then it closed the week on 19,653. So the immediate support from here would be 19,500, 19,260, and 19,100 for the next week. Resistance side, we could see a strong resistance of 19,750, 19,900, and 20,190 would be the next resistance. Nifty 15-minute chart. So let us see what the Nifty has really done in the internals of Nifty. This 15 minutes chart, you can see, friends, as we had discussed, the Nifty opened on a very weak note, and then it was moving sideways the entire day. And then the second day there was a gap down opening, and it was around close to 19,300. It took a very good support, and from there it traveled to 19,500, which we discussed that this zone would be a very vital zone for Nifty. And following the last day on the 6th, there was some sort of a pullback rally which is happening in Nifty. So what can happen in Nifty in the forthcoming days? You can see that we can see a slight rally till 19,750 levels. This would be a good level to rally. From there it will form a very good resistance. This would be a very good resistance. From there Nifty can either it is going to be breakout or a breakdown. This level would be a decisive factor. So 19,750 is a very key level to watch out in the Nifty charts. So even the Nifty option chain analysis shows the same pattern. You can see here too many put writing has taken place in the closing day of Friday. So you can we can expect that many of the traders are expecting that 19,550 would be a very strong support, and the upside is capped at somewhere around 19,750. This zone is acting going to act as a good resistance. Any movement from here will determine where the Nifty is going to be priced at in the forthcoming weeks. Now let us see what the bank Nifty has done. Well, nothing as much. We were expecting the bank Nifty to be remained weak with the continuous selling of the FIIs. You can see that the bank Nifty is also moving very sideways. Not a big action happening in the bank Nifty nowadays. It's just moving in the sideways zone. So 44,250 seems to be a very good support for the bank Nifty, followed by 44,000, which would be the next support level, and 43,350 would be the third support. So Nifty, Bank Nifty is kind of looking very weak. You can see a formation of double top in the Bank Nifty. So any fall from here will definitely confirm that this is a double top formation for the Bank Nifty, and we can expect the Bank Nifty be weakened for the forthcoming weeks. So what is the option chain analysis reveal in the Bank Nifty? The same thing, we can see too much of call rating has taken place. 46,000 is going to act as a very strong resistance for the Bank Nifty, and we are expecting a very good support of somewhere around 44,200. This zone is going to act as a very strong support for the Bank Nifty. So we are expecting downside to sideways basis for the Bank Nifty as well. Now coming to the Indian VIX chart, no big rise in the Indian VIX chart. You can see that a lot of profit taking is happening, but the volatility in the market was very numb last week. So the volatility factor has come down as per the Indian VIX chart. So having a look of the FI and the DI activity, well, FI has been on a continuous selling mode. You can see the entire August they were in a selling mode. September was also in a selling mode, and right now they are continuing the same with the October month as well. Right now, 8,400 crores worth of cash segment stock has been sold. So DIs have not been able to absorb the entire selling pressures of the FI. You could see they were supporting the market for the entire month of August and September, but we have to wait and watch as to what happens in the October. So FIs are still continuing this selling spree in the October month as well. Nifty mid cap sector seems to be in a swelling mode right now. You can see that a profit booking is taking place in the mid cap space as well as the small cap space. You can see no big action in the Nifty mid cap space. So we are seeing good amount of divergence which is happening over here. Looks like it is going to breach the support at this particular level. We would like to wait and watch as to what is the action which is happening in the mid cap space. In the small cap space also, you can see not much of a big rally which is happening here. We did enjoy a good amount of rally from April, but right now it is taking a pause somewhere over here. So a lot of profit booking is happening in the small cap space as well. So nothing much in the small cap space as far as I am concerned. Well, let us now move on to the NASDAQ charts, the US charts. You can see that a good amount of short covering took place on Friday. This is the candle which I'm talking about, and you can expect that then there'll be some sort of relief rally which will occur at around 15,200 levels, beyond which the weakness will intensify in the NASDAQ chart as well. In the chart also, you can see the same identical candle which is being formed over here, which was on Friday. You can expect some amount of relief rally, and 34,000 would be a good resistance zone, beyond which the weakness of the Dow will again continue. Well, having a look at the Indian rupee chart, looks like Indian rupee is taking a very good strong support at around 83, but the rupee is still looking very weak. It will be of no surprise if rupee marches down to $85. So need to keep a close eye out at this particular level of $83. Well, the gold chart is also looking weak, friends. Here you can see it is managing to take a support over here. It was looking very weak the entire last week. So it is managing to take some support around this level, but then we can expect the gold will bounce back to around 1875, beyond which the further weakness in gold will continue. I am expecting the levels of 1750. 1750 would be a very good accumulation zone for the gold. So watch out for further weakness in gold, and we can expect some sort of a weakness which will make the gold come down to this particular level. This level will be a very good accumulating opportunity in the gold. Brent oil chart, we were discussing that the Brent oil will take a strong support of around $88, but looks like it broke this support, a very vital support for this Brent oil. And you can see there is the weakness of Brent oil has further intensified. Last week there was a good amount of selling pressure in the Brent oil. It was down 13 percentage in the chart, and you can see that it is for trying to take some sort of support around $83. So this zone appears to be a very crucial decisive support for the Brent oil. Breaking this support, we can expect that the Brent oil will again move down to $76. So we need to watch out as to where the oil is really headed. We were expecting that it will take support somewhere around $88, but it managed to breach this support, and looks like the Brent oil is looking very weak at this moment right now. So, friends, let us summarize the global markets. What happened? Nifty was on a negative bias last week. There was some relief rally in the last 2 days. So, Nifty was on a negative note. The Bank Nifty was on a weaker note. The UK markets were looking very weak, and the DAX market, which is the German market, was also looking weak. The Nikkei market in the Japan was also looking weak, and the Kospi was also looking very weak. So you can see the entire global scenario is very weak right now due to the high interest rates in US market. And where is the US market? Well, the Nasdaq and Dow were moving sideways last week. The fall happened in Nasdaq and Dow a couple of weeks back, and now it is consolidating at this level. So further weakness is also expected in Nasdaq and Dow. So this was the action which happened in the global markets. Talking about the commodity sector, the gold is looking weak and the Brent oil is also looking very weak. The USD and INR were trying to take a good support, but looks like there is a bearish angle in the Indian rupee as well. The Nifty mid cap and small cap sectors are experiencing profit booking. So we will look that in our sectoral view as to which sectors are good to be in the moment right now. Well, friends, now let us see a sectoral snapshot of last week performance in the private bank space. HDFC, ICICI, Axis, Kotak, Federal were all looking very weak. Even the public sector bank was looking very weak. You can have a look of all the charts in the public sector banks. Profit booking is taking place in public sector banks. What about the IT space? In the IT space, Infi, HCL, Tech Mahindra, Wipro is also experiencing profit booking. They are reportedly to have weak set of numbers in the Q2 quarter. And about the pharma space, Dr. Reddy, Cipla, and Sun are extending their correction. And coming to the FMCG sector, Godrej Consumer, Dabur, Marico are all looking very weak. Even the FMCG sector just said to the market that they are expecting a single digit growth in this quarter. So, no big fireworks from the FMCG sector. What in the auto zone, Tata Motors, Bajaj Auto, and Hero Motors were all having a sideways performance, not bullishness in the auto space. And coming for the chemical space, the Tata Chemicals is in a very good accumulation zone of 1,000 rupees. So we can have a good look at Tata Chemicals. In the paint sector, Berger and Asian were sideways. Talking about the service sector, well, this is a sector where I'm thinking that there will be some good performance in the coming weeks because the ICC Cricket World Cup series has started in India, so we can see good amount of uptick in the hotel booking space. Indian hotels, Lemon Tree are all showing good strength in the services sector. Kalyan Jewellers and Titan did perform relatively better than the peers. Well, friends, I hope you like the content so far. So please do remember to subscribe to my channel and hit the like button. Now, talking about the stock specific news, let us have a recap of what we discussed last week in the sugar stocks. So, the Balrampur chili milk is settling down to a very comfortable level of 420 levels. This was the level what we discussed last week. 420 is a very good support zone. So, I'm looking at accumulating some stocks in this particular zone. The sugar stocks, the rally is yet to be resuming in the Balrampur chini mill. So, good level of accumulation is happening in Balrampur chini mills. Coming to the Tata Chemical space, this is what I've been talking about. 1,000 offers a very attractive value buy to the investors. So this level of 1,000 rupees can be considered to accumulate in Tata Chemicals. Well, for the Tata Power, it is settling down well, quite comfortably at 255 levels. This seems to be a very good support for the Tata Power. So, any amount of bullishness will be visible in the stock if it crosses the level of 270 to 275. So, currently, this stock is settling down well. So, a very good, attractive, and a trade momentum opportunity for this particular stock at these levels. Well, coming for the stock specific news, friends, the ICC World Cup did the kickstart last week, and this is a very big event which sees that many sectors in travel, tourism, and foods are going to be the major beneficiaries in this particular event. So, one particular sector which is the hotel, seems a very good opportunity for us to play some momentum play in this particular time. So, following this particular we could see that there's a positive news. The Lemon Tree Hotels has opened a new hotel in Mumbai. So this particular stock is going to celebrate in the forthcoming weeks. And other hotel also reported that they're going to expect a double digit revenue growth in the Indian hotel industry for FY24. So we are having most of the sectors which are going to experience a single digit growth, but whereas they are expecting a double digit growth in this sector, so seems to be a very good momentum play we can ride for these particular stocks. So, taking the news into consideration, I managed to study some stocks I found I thought it is worthwhile to share it to the viewers. So, one particular stock, which is the leader of the pack, the Indian Hotels, a flagship hotel of the Tata Group. Currently, it is trading at 422 with a market capitalization of 60,000 crores. The P of this stock is around 57.4, whereas if you versus the 3 years average P of 62.37. The currently is having a very small debt. The year on year EPS, you can see a rise on year earnings per share, and the ROE is also quite very attractive, and the promoter holding is around 38.19. Well, it's a house of the Tata, so need not worry about the promoter holding. But here is one interesting fact which I would like to share it to you, friends. Here you can see the top line. There is consistent growth. Last quarter they reported a top line growth of 15 percentage, and following the before that quarter, the March, there was a huge jump for quarter on quarter. They experienced around 86 percentage. So if you see right from the unlocking days of the COVID, you could see there is good uptick in the hotel industry every quarter on quarter. So this quarter too, I think double digit growth is expected in the hotel sector. So Indian hotels is currently offering a very good buy at the particular levels. So looking at the technical charts, there was a very strong uptick in the technical charts in the month of April. Around this month, there was very bullish, and it took the chart from 300 to 375 in just matter of 2 months. So after that, it did consolidate in this levels around 400 to 375. There was good amount of consolidation. There was a breakout which happened in the month of September, after which it started to correct, and currently it is taking a very good support at around 400 levels. So good accumulation zone for Indian hotels are around 400 levels. So given that they are going to report double digit growth, I can see a good upward momentum in this stock. Another particular stock which I would like to discuss is the of the same category, which is Taj GVK Hotels. This is also the same flagship company of the Tata Groups. Here you can see in the same thing happened in the April. You could see good amount of momentum which was built, and then the stock took a very good support around 235 levels. This was a very good accumulation zone. There was a good breakout which was noticed in the month of mid of July, but after that the stock did correct, and it has been trading sideways since. On Friday, the stock showed a very good positive sign. It did break out its zone, and looks like it is facing some sort of resistance around 250. So once this level of 250 is crossed, you can expect the bullishness to be resuming in Taj GVK stock. Well, friends, that's a wrap of this week analysis. I hope you like this content. So stay tuned for more upcoming videos on a regular basis. Have a good week ahead. Thank you.